Good afternoon, and today is October 12th, 2023, and it's a Thursday. And we're going to do a end of day review for today. And today at 8:30 Eastern Time, the CPI data release. So that's the high impact news for this week and for today. So let's see what is, what opportunity the markets, bring to us today, and what lesson the markets, want to teach us today. But so far from what we are monitored today, right, it's a beautiful, liquidity run. Whoever have a bright mindset or a good, mental game can win very big today. We saw lots of moves that, if you catch it, it worked out wonderfully. That's the beautiful of our market. Don't ever feel missing out, right? Because the next opportunity in the pipe or in the queue, it could be bigger than the one you feel like you missed. So when you make a trade, don't ever feel, feel bad and try to get in and chase them. That's not a good practice. And we did this morning. We feel like we missed a trade, then we have to step back away 5 to 10 minutes and we come back, we feel much better, right? And this morning we did do the recording at exactly actually 3 minutes before 8:30 Eastern Time release, and we walk in the real time. We watch in the real time how the quick will run right here, right? By the way, today the market's open at 436.91.95, right, which is about 64 cents above yesterday's close, right? Yesterday's close at 436.31, and today is open at 436.95, and it closed about $2.25 less, which is 436. No, not 436. 433.70 right there. So it's open right here. We see an open. Right, it's open at 9:30 right here, which is 336.95, and it closed at 433.70. So basically open about 64 cents above the close yesterday, which is 436.91. The reason why we have to keep track at open close, because that's a very key level for us, right? That's the price where the seller and the buyer agree to hold for the next day, trading day. They agree on that price. So that's price meaning something to us, and we made an effort to memorize or try to remember that number, because that will help us increase our ability to reach, the price action, or in other words, reach the liquidity run right there. And we pick up that, tips or that hints from, I think, from Linda Breakfast, Linda Breakfast Rasky. Yeah, she did mention about that technique, and that we try to improve, apply that technique into our trading, and we saw it really improved, how about to be awareness of the price action instead just watch, the tab or the price action without any point of reference. But if we would pay attention, it really helped us a lot. yeah, here's the book that Linda put on her website. It's about, you know, how to build a trading foundation, and in there she mentioned a little bit about, you know, try to you know, in the tab reading technique, she gives some very helpful, you know, tips right there. And one of the tip we found very helpful and we apply that means we need to memorize right here to say about the reference point right there. One of the tips we get out from here is about the price. Yeah, she said, don't watch the price for the sake of watching price. Watch price with attention to do something, anticipate in certain response right there. Yep. Yeah, you can download this from her website and read through it. It gives you a lot of tips and hints. Okay, anyway, go back to the charts right here. So basically we mark the first candle right at 8:30 right here. So we mark the low, which is a sell-side liquidity level, and then the high right here, which is the buy-side liquidity level. And we can see that market starts selling off, and right here it just retests and it sell off. Just retrace, and right here it just retrace and sell up again. And this morning the reason why this morning at 8:30 we try to go short, right? But we're not so sure because we identify this level as a short level. But we want to go, if you look at the video, basically we anticipate it to be like this, okay? Okay, and then retracement. So basically it's a market structure shift, right? It's downtrend, right? We want a confirmation. Basically we wanted to take this buy side liquidity. But in this case it did not. It failed to do that. So we kind of not convinced or not in you know, basically we don't see what we want to see. So that's the reason why we step back. We don't take the trade, right? And then it come down all the way here. So now we look back, we say that, okay, so something going on right here. It take this, it doesn't take this by a sell side, but you know, after that it did right here. So, and then it take this sell side, after it takes this sell side, it don't give any pullback until right here, right? Until there. So that's the reason why we feel like we don't want to go in the trade, so get in right there. Okay, let's check to see what trade we took along today, right? So if you look at the 5-minute time frame, right, we see the phenomenal today, right? Okay, so we see this the London, right? So yes, today a little bit it's the reverse or the opposite of yesterday. So let's go with today first, right? Today the Asia high take out the high of the Friday, and then the London high take out the high of Asia, and in the NY, which is New York pre-market, take out London high, and then it form a what right here, the double top, or you can say it's a turtle soup, you know, set up right there. The level can be right here at this level. You can put the sell stop right here. Right, let's start up right here. You can get order fill right here, order fill right here, like that, and boom, it goes down. You see, so you can short right here at this level, and this level coincident with the 4-hour time frame right here. We put right there, right? 60. Let's remove this for now so we can see. Okay, so this is the 4-hour time frame low, the fair value gap. So that's one of the level that let's pull out the 4-hour time frame so we can see what is that. So basically that level. So we mark that before we go into the trading session today, because we anticipate if it's going up, then the first level it going to is this level, the fair value gap. You see the fair value gap right there, and the next level it's gonna touch. This is a very key, you know, level, which is a swing low. It turn into a resistance, or in ICT concept or ICT term, it called a bearish breaker. So that's an idea right there. But you see that it hit this level, and I just touched the level, then it's, you know, 60. So it's 438.60 above this level. It's 49, right? So above level 11 cent right there. Okay, so that's an idea. So basically we have a setup right here, a double top or a turtle soup setup, and we took level at the turtle soup entry short right there. So if any of us who trade in the pre-market, it's a perfect right there. You can put order right there, and huge down move right there, you see, and then it come back right there. Okay, so look at what. Okay, so we see that the New York high take out the London high. Okay, so when we look all of this, you can see that it set the sell side trap right here. So it's a perfect setup for short right there. You see, we draw this line to see that the whole thing right here is, you know, trap the sell side liquidity in order to make a big move down right there. So keep in mind that in order for the market to go down, they have to trap the sell side liquidity. Basically, they have to, you know, the smart money they want to sell, right? That means they have to make sure that the buy order line up for them. So that order will become the liquidity for them when they escape they sell order. So that's the market's mechanism behind the scene right there. So that means that when we see the market go up, we should not be fear to short, right? But the job first is we have to identify, you know, time of the day or time of the week or the week to short them. Because when we see that it's the right setup and low risk, then we short like that. And you know, and today is a typical trap right there for sell side right there. You have Asia low, Asia high, take out the prior day high, and then you have the New York pre-market take out the London high. But you see, all of this move is just very in the tiny range at all. All of that it just sets up for the sell off, and you see the double top bottom right there. Look at yesterday. Yesterday different. Yesterday is the opposite, right? In the London, it keep going down. Let's look at the yesterday. Okay, so the yesterday right here, you see the yesterday it did not take the high at all. It between the range of the prior day. Okay, and the London high take out the Asia, but the Asia did not take out the prior day high at all. It's still in the prior day range right there, and then it go all the way here. It retest bearish breaker or supply zone or support zones or support range right there, and it sell off. So that's a little bit different right there. Yeah, so pre-market we identify lit level right there, and it happened. On the sell side, we identify 470.10 right here. That where we're gonna go and short them. Yep, we identify this level. It's key level, and it did happen at around that level. That's amazing right there. Here's our note rate. When we're going, we identify both, right? We identify the buy side liquidity level and the sell side level. And on this, we identify 437 and 10, which is this level right here, right? Level. Let's look at the 1 hour time frame to see how that level is important. Which is this level right here. So basically we identify this level is a 4 breakout, right? So it break out right there, but it's 4 breakout. It's not gonna sustain, you see. So as soon as we put a buy stop right here, I mean sell stop, we execute over here. But when we in pre-market, if we engage in pre-markets, but if we did not, then we get executed here and we can take a profit around here. And then we have a second 10 to short them right there. So that, like we say, if we miss something right here, don't worry. Market keeps you the second chance right there. It's more beautiful right here. As soon as it hit this, it never look back. You have a huge move right here, about I think $5-6 right here. Yeah, all the way here. Wow, $5 move right there. $5.25 move right there. And that's the reason why we identify this level right there, total sub entry X1 right there at 437.10 right there, which is this level right here. Okay, look at the trade that we take, right? We saw the total subset up. We take 1 2 trade today, right? We follow our rule that we only take 1 trade per week, and the trade we take either on on Thursday or on Friday. So let's see what our how we make our decision, right? So with 4 total subset up, yeah, the sell stop at 430. Okay, 430, 740. Oh, the open below this level, 40. Why is 437 level again? Let's see. So here's 4-hour time frame, right? A little bit crowded here. So 4:30, 42 right here. 40. Yeah, this level right here. So it's actually 49, I guess. So yeah, I think it's 437.10, not 40. I think 10, this level, because we marked that level right there. Yeah, this is the candle we marked right there. And it opened at 9:30 at 436.95, right? So below this level right there. This is the level, I think 437.10, not 40. That's the typing error right there, which is basically this level. And you see right there, this level, and it opened below that 9:30, below that level. It's 10. So we saw the setup right there, and then we have another setup that we just observe. Let's see what we see right here. So this setup, we give it a name called prior day close breakdown short setup. Basically the condition, you have make a new high in pre-market, take out London high, and the high impact new release is start breakout and take out London low, right here, and we'll go short when it opened below the prior day close right here. This candle, we short them. So that's the setup that we see at that moment. And then we have another setup, this one for, okay, so we have another setup company here, which is a bearish breaker, right? And we just trend follow, it's a downtrend, we just follow the trend. Whenever break bearish breaker or bullish breaker and fair gap is a trend follower trade right there. So it's in this case trend follower. The trick is that where we're going to put our stop loss on this, because later on we see that if we don't careful handle the stop loss, we will get kicked out, and then market move into exactly the direction that we initially wanted to. And then on the on the 5 minutes, you see that we have a setup, a total sub, long, right? We put the buy order at 435.32. This is the anchor level, candle for us right there. So as soon as it go down and it go up, it will execute our our order. Time at 45. Let's see how far that can what the target of that trade right there. On 5 minutes. Okay, so if we execute right here, we gonna, so the target gonna be at least this fair value gap right here, right? Or at least this order block. So our target gonna be this order block. Yeah, it reached that order block right there at 12:30. This is a bearish order block, and I want to see what is the risk and reward ratio. Wow, not bad at all. And then our top loss is gonna be right. We're gonna from this to the swing low right there, 5 cent swing low, right at 5 cent right there. So basically we reached 47 cents, and we can, at least it's 1 to 2 ritual ratio, right? 47 cents, and we got almost 1 to 3. Yeah, 1 to 3, 1 to 3. So let's take this screenshot. So it's a target at a bullet bearish order block hit at 10, 20, and the risk reward is 0.47, and we get 196, right? So basically it's more than 1 to 2 risk reward, so was approximate, we just put right there. So this is the bearish order block that we are trying to end, right? And that's the target for the long, and also it's gonna be an entry for the short, right? Because we have the bearish order block, fair gap, all this retest right there. So there's a short setup for right there. It's the exit for the long, but it's entry for the short right there. So that is the beauty right there. If we are very well versed on the liquidity run, so we know when to exit and when to entry right there. 12.20, right? So ritual 1 to 3. Okay, so right here we have a setup. You see, it's auto block. When you can trick the whole right here, so you know it's auto block. But the trick this way is a bearish auto block right there, and see the fair gap right there. It retests exactly right there, and then it's go down. So let's do this right here, and we have a short setup right here. It's a beautiful short setup, very powerful. Wow. Okay, so we have bearish breaker, fair gap, right? Retest, and this one is a trend. Remember, whenever we do breaker and fair gap, it's gonna be the trend follower, and the trend follower always have a higher probability than the order block and fair gap, because that's the reverse. That is the again the trend trade. This is a trend follower trade right there, right? And short setup, and we do have the buy side liquidity rated, right? It rate over here, and it also rate right here. You have rate right here, right? Buy side rate right there. We have a buy side liquidity, and then we have a sell side liquidity drop. That a condition perfect to short right there. And we have entry time at 12.20 right there. And our stop loss is 5 cents above the breaker, okay? And our target is at least this sales already. But if you look on the if you look on the 1 hour time frame, our target going to be around this level. But anyway, we run out of time, so I want to keep this short for now. So this is the yeah, this, sorry, I think this a the order block, not the breaker. Yeah, I think we need to slow down a little bit. Just try to fix that. So that this one is auto block, okay? That's auto block, not private breaker. And this is our entry right there. Yeah. So the auto block is not only it also can be a trend follower right there. Very interesting. Yeah, we haven't thought of that. We always thought the auto block and feather block going to be a again a trend. All right, we go to the. I try to wrap it in 3 more minutes. Okay, basically we took a real trade today, and okay, here we see the setup. That's our idea, right? So this is our entry level, right? Because it's a 4 breakout. Okay, it's a double top bottom right there. It's a double top pattern, right? We see it's glow above, then people thought it's gonna be break this level, but actually it sells. So we go in a little bit late right here, right? The reason we don't have a confidence, so we have hesitant. So, but anyway, we go in right here. And the trick is that because our account is cash account, so we cannot do short directly on the stock. We buy a put option. And the time we entry is at 11:21 right there. So let's see how it turn out. So we pay $2 just for one contract, which is about one option contract, and we have to exit at 5. Yeah, we exit the trade at 11:50, right? So we stay 55. So we stay in the trade about 24 minutes or so, right? Okay, so we go in about 11:29. No, we go in 11:21, exactly 21, not 19. And we get our 11:55. So yeah, we stay for 24 minutes right there, and we sell at 2:44. So we make profit about 10 cents right there. So we lesson learned that we exit is a right choice. You know why? Because if we don't exit, right at first, basically we go in right here, this candle right here, 21. and when we go in, it go back to that level, but it did not close above that, so that's a good sign right there. And it kept moving out, at this level we have a 30% profit right there, but we anticipate it gonna break down and take this sell side. However, you see this fair value gap and order block right here, it did not break down, and you know what happened? It continued to build a sell side liquidity right there. It built a huge sell side liquidity, and then you see it come down from there. So we learn our lesson, right? If we mix at this level, then it wait for its comeback, right here you see. With the huge up close candle, you know, a lot of people follow the trend, thought that okay, it break this this level, right? So it's gonna be a real breakout, right? But in this case, it's a false breakout again, which is played into the turtle soup right there. The turtle soup is bet on the false breakout, and it turned out a beautiful trade if we are able to go in with the level. And you see huge, like a $5 move right there. But anyway, we have a successful trade today. We follow our setup, we execute, and it become a winning trade for us. Not much 10 cents, but that's not our goal. Our goal right now is try to build our methods or our system right there. So what we are doing is we try to practice as much as possible so we can collect the data. We follow the hint, right, from this book. If you read this book by Jack Swagger, you know that here's the book that I'm talking about right here. So this the book that's Jack Swagger. It's the new market wizard. So it's the second edition. The first one is the market wizard. And in that book, he says something that we have to build our own, you know, system, right? Let's see. Right here. So basically, we cannot just trade other people's methods or setup. We have to practice that. We have to test out all the methods to make sure it matches our personality. And everyone's personality is unique, right? That's which ones you have to trade out, and that's exactly what we're trying right now to see if it matches our personality. And then that's it work of, you know, we try to build an edge right there. And that's what we're doing exactly. We try to develop a method, a system. And he say that, you know, that's develop your own approach or method we try to do right now is take a lot of time and hard work, and that is what we're trying to do. And he said expect many dead end, multiple failure before we find successful trading, right? For you, which is for us right there. It's not easy, but it can be done. And he said a very interesting thing at the end right here. He said the price or the market is not random. The market can be big. You know, it can be done. They keep that in perspective. I think that's it for now. We go over about 10 minutes or 9 minutes or so. By the way, have a great evening and see you tomorrow. Bye for now.